Well, good morning, everybody, and welcome to the trade update for February 24th, 2013. I'd love to thank the wonderful participants and support crew that helped me make the M21 workshop a great success last week. We just had an awesome time, and I can't wait to see the finished product. It's going to be great. Before we get going, let's just take a look here at our disclaimer and let you know that the presentation is given for educational purposes only. We're not broker-dealers or financial advisors, and we're not making any specific trade recommendations. Also, the risk of trading loss in options can be substantial, so please be aware of all your risks prior to placing any trades. And note that we may or may not be using computer-simulated trades, and in the event we are, we do the best we can to make sure the results are as accurately represented as possible. Okay, if you're watching us on YouTube, come on over, check out our programs. We got the M3, the Bearish Butterfly, the ROCK program, the group coaching program, and the Trading Triangle coaching program. And the M21 will be released as soon as the folks down at SMB get the thing produced, which would probably take a couple of weeks. It was a really big program. So be sure to join our mailing list, get the free report, 7 Secrets to Becoming a Successful Trader, and sign up for our weekly webinar as well as other emails we'll be sending out. And of course, we got a bunch of stuff still in development here, so I'm looking forward to that. Let's take a look at what's going on in the market. If you remember, last week I was looking for the Russell to come to about 1165 and probably roll over. Well, we made it to 1165 and closed at 1164, up slightly higher intraday. We'll see if the bears can actually take over and do something here. One thing I was looking at, if we take a look at the SPX, is we're still a little bit down from our post highs here. So that being the case, we may try and push up into previous highs. If that's the case, that'll push the Russell higher because the Russell's been acting a little bit stronger than the SPX. So that'll, on a day-over-day basis. So that could push the Russell up towards its highs. However, I'm still of the opinion, regardless, even if we do come up towards the highs, that we're going to continue to break down and run sideways. What would change my opinion on that? Obviously, a strong breakout in the SPX would change our opinion on that. I have two areas where I think the market may expire. If you see, last month we were very, very close. We it expired slightly higher than we thought it would, and I was saying it did bounce a little bit harder than I thought it would. So that's not a surprise. Coming into next month, I'm thinking that we roll over somewhere between here and the previous highs and maybe come back down, retest the lows, and end up in this 1100 area. The alternate possibility is we break out. The SPX breaks out. We're probably going to 1250. And probably relatively quickly, I'm going to roll back over to around 1200 for the close of the month. So those are the two scenarios that I have. I'm still thinking that we drop down. If we look at the Dow, we see the Dow's well below its all-time highs, and we are also in an area that's relatively close to a resistance level. So if the SPX pushes up into resistance, this will push up into resistance. It'll force the Dow up to I'm sorry, not the Dow, but the Russell up to its all-time highs prior to rollover. If the SPX and this break out of these ranges, then that's a different story. Of course, the NASDAQ's our leader, and this is already broken out. Early warning sign that we're coming down would be a support break here, this short-term support level. So that's what I'm thinking with the markets. I still have the exact same opinion as last week, although I don't like how they're hanging up at the highs here. All right, let's take a look at what we had for positions. As far as the February trades, the only thing we had open after last week was the V Condor for February, and we said we were going to expire that trade, and that's exactly what we did. Let's see, we ended up with, let me just quickly go over here, February V Condor, if we go back a day. And if you look at our analyze graph, this is what we looked like on expiration day, and no problems there. We just let's just let that go. As far as our open, well, actually, let's talk about the March Bearish Butterfly. Let me close this out. So that's all we had for February that was left open from last week. March Bearish Butterfly kind of looks like this. And actually, let me go back. Yeah, that's the right date. March Bearish Butterfly looks something like this on Thursday. I had scaled into my last third on Tuesday, I believe. Let me just bring this over here. On Tuesday, we came in here. We bought our 10 1160 puts. As you know, I am expecting the market to roll back down into here. If that's the case, then this should be a very good trade for the month. If we push this to Friday, this is down more because our delta is so darn high. With the continued up move here on Friday, this puts us down about $7,000, which is almost half of our max loss number. So if you remember with this, and I just kind of want to go over what happened here, we started this out up at 1140, and the market pulled back, and we were near the top of our rally, and this had to be rolled back because it hit an adjustment point. And I was saying that following the guidelines in this really, really bullish market probably is not the best idea. I think the rollback was needed because if you didn't have the rollback, you take on too much downside risk. And it turned out that would have been the case because the market continued down. However, I was saying on a bounce that we should start treating this like a M3 position to the upside from a delta standpoint, because we know that the market's been bouncing, and I thought the rollback and following the guidelines was fairly a bad idea. Had we done that, this would still be up a significant amount of money here, but because this is a guidelines trade and we're just following the guidelines, then we are down a little bit. That said, I think this is still positioned well. If the market does what we think it's going to do, we could certainly end up, because this will as soon as the market reverses, this will pop up to about $14,000, $15,000 in profits. And if that's the case, we can just drop out of it when the marble hits the top of the hill, as they say, and move on to the next month. If the market kind of sits here for the week, then we're going to end up in expiration guidelines, and we're going to end up doing this roll. If the market continues to go up or it goes up hard, and we don't shift into expiration guidelines, this will max loss out prior to all-time highs, I think. Well, no, about 1180. We're at about all-time highs. And we'll be doing some rolls and stuff, so it may last a little bit longer. But this is it could go either way. The market breaks out really hard, then we're probably going to take a loss on this. And if it does what we think it's going to do, it's going to be a really good month. So, as is the case sometimes with the Bearish Butterfly. So that is the March Bearish Butterfly. I did open our March M3 and a March ROCK trade on Friday. If we take a look at how I entered the M3, I actually did this a little bit behind the market. As you know, you should know by now that the opinion is that the market's going to be down. So I opened this way back at 1120 shorts. I put in 5 verticals here at 1120, 1130, and 5 at 1120, 1140. I added 1 call. Our gamma trend's a little bit, actually it's not that bad, but I'm outside the tent. And that's because I think the market is going to come back in this range. If we're wrong and the market takes off, then we can play this upper range later by doing a roll-up. But right now, this is where I'm sitting because of where the market is. And let's see, the ROCK trade, oddly enough, when I entered the ROCK trade, we did not have the proper delta numbers in order to actually go into a ROCK trade. So I just went in a standard M3, and I didn't want to do the same trade I was doing with the M3 trade, so I came in here and I did the 1140 shorts, which is about 27 points behind the market, and I didn't put any verticals in. I added 2 calls. And the reason I added 2 calls again is because I think the market is going to be down. So I went ahead and did the 10 butterflies with 2 calls and put myself in something like this. Gamma trend's really nice to the upside, and the downside isn't too bad. So that's how we entered our ROCK trade. And of course, if we outrun the if we break out to the upside, we'll go into a ROCK trade up in here. Other than that, we'll probably end up trading this out as an M3 for the month. And let's see, what else we got going on here? Okay, that was those entries, and then we had some April trades to enter. And if we take a look at those, we entered an April V Condor, which was actually entered on Tuesday. And the reason I entered it before the February expired was because the March was already gone. So the February V Condor started out with 1240 and 1150. What was it? 1150 short, 1050 short strikes, and we did a straddle at 1140. You can see that there. This is essentially what the position looks like now, and everything is fine. So we'll have to see that this is good to go. And let's see, our delta limits are fine, everything's fine. And for an April bearish butterfly, which I do like the entry this month so far, was done at 1150 shorts, which was about 20 points behind the market, about a 1-to-1 delta theta ratio, $11 price tag, 11.59. So that's not too bad either. And this position looks like this. So that is what we have for the positions. I have lost my questions thing again here. So let me see if I can find it. I want to view my questions. There we are. Okay, great. All right, so that is what I'm thinking on as far as the market goes. This is what I'm thinking, and this is what we've entered for trades, and we've got the condition of the March trades. So, okay, so I'm ready to take some questions here. All right, so Andrew, yes. Can I use expiration guidelines much earlier as a response to a rollback in the bearish butterfly that I'm not happy about? Yes. Yeah, so I could have done that. So if I wanted to, I could have certainly come in here and all we're doing, right, Andrew, right, is we're cutting down the delta to deal with the fact that we think the market's going to bounce higher than and whipsaw us through this. So that being the case, then February, no, I want the March. That being the case, yeah, back in, let's just go back to 2.3. Let's go back to 2.3, and we'll just take a look at some alternatives that we could have done here to help with this. So let's see, this was, what was the market now here? All right, the market was right here. It's up about 3,000. So let's take a look at this. And I'm just going to put this in another account. Let's clear this. And we'll convert. So here we are at March, well, earlier in February. And we got our bearish butterfly is, well, we'll just say that it was up some money, right? So it was up like $3 grand or something. But anyway, we'll just leave it like this. If I'm here and I got whipsawed and I'm thinking the market's going to fly up and I want to do something different, one of the things I'll do with a single butterfly, I'll cut my delta to 150 on a single butterfly. So if we push forward, I'm just going to get an idea on the price chart of where the market started pushing up here so that we can make this faster. Right, so we started pushing up on the 5th, 6th, 7th. We'll probably want to look at this around the 10th. So if we want to look at this around the 10th. Right, so 107, and we'll hit the next day. 144. Yeah, so I want to keep this around 150 with one scaled in, and then I'll start scaling in the next one. And then once I do that, I want to stay more in the guidelines within the bearish butterfly, so I could scale in here. All right, and that's going to actually increase my negative delta, but that's fine. Right, so now if I go 500 delta intraday, now I'm going to start kind of watching things a little bit closer. Oh, way back down. Let's go. Whoops, let's go to 30. Yeah, then from here you can just kind of go into your expiration guidelines, and then you would just add your last third in here. This may have actually done worse. Like I said, the best case for this would have been to switch into an M3 type of a position, which would have done quite well. So I'd convert that. Right now my delta is too high, so I'd actually have to pull out of these. If we're doing expiration, we'd have to go something like this. We'd probably have to pull even more. Yeah, we have to pull the whole thing. You just want to convert that. We'll go into the next day. Of course, we'd have to T-log everything together. Right, so yeah, so we're down about 5,000, going overnight 150, and then this is an intraday thing. You'd have to keep an eye on it, which makes it a hassle to manage, but certainly could have done something like this. Go to the end of the day. Let's see if we would have had to do anything here. Not really. You'd probably add a couple more in here. -4. Just to get your delta down under 250. Right, that's not really helping any, right? So we'll probably fully scale in because we're getting some market skew coming into the market now because everybody thinks the market's going up. So we get fully scaled into that, and we just have to maybe scale out of a few of these. 4, 2. Right, that's about 250, so we convert that. And we'd be in something like that. And just kind of do a couple intraday checks up here. I'm kind of curious. Okay, so we'd be up 8. Okay, the intraday, that's fine. I don't remember how big of a day this was. 12. Yeah, intraday, that's all fine. So you'd still be down just as much if you went to expiration guidelines there because it was so aggressive on that move. Well, like I said, if you did the M3 issue, you wouldn't have had an issue here. So you would have went in overnight like this. And let's go to the next day. I don't think we would have had an issue. Right, you're down 11, which is fine. The following day, we're up 13 again. Right, and then we would be scaled into, yeah, so we start scaling into these, -4. You would just be rolled up higher. And that would be fine. And then the following day, of course, on Friday, we would have got whacked with that, so we would have been down another certain amount of money, about 9,000. Right, and then you would have been scaled in here. Minus. But if you went into an M3, you'd actually be up money. Right, which would be the better choice for that particular thing. So even this is -301, convert trades. You'd have to pop out of a couple of these other butterflies. You'd be much more in the center of the position and much more vulnerable to a pullback. So if the market does pull back like we think it's going to do, it would be more of a problem here. If the market stays, and then we go something like that. So that's just an example. If you wanted to extraction guidelines, you'd be down a little bit more money, but if the market sits, you'd be much better off. If the market continued to go up, we'd actually have a couple of these butterflies. We'd be better off. But you miss the benefit of the market swinging back, which is normally what happens in most normal markets. I mean, the markets have been so bullish that we've just had these crazy extended runs. If the market swings back like it should, then our other normal position will do very, very well. Otherwise you're better off rolling on top of the market. Like I said, if we came back, we did the M3 to the upside, we could have maintained our profits. Actually, come to think of it, when we started this, the actual trade was up around $3,000, so we would have actually been better off because we'd only be down about 6 here. We'd actually be better off having stayed in the expiration guidelines as far as a profit and loss number today. But that's generally how you would work that. And let's see, I guess that's all we have for questions this week. So thank you for joining me, everybody. And I'm, like I said, we're really excited about the M21 release. It's probably going to be 3 or 4 weeks before that comes out through the S&P crowd. And thanks for showing up. I will talk to you guys next week.